Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein with your metals market update for this Thursday, the 20th of July, 2017, pushing 2:20 in the afternoon, Central Daylight Time. So another gain for the gold, a small loss today for the silver market, but that market's corrected quite a bit in the gold-silver ratio. Copper pretty close to unchanged and an up day in the platinum. Now, the events of the day that were driving the market was the Bank of Japan, in which that bank said, hey, we don't see any inflation, and we don't really see it where we're going to hit our target to, guess what, 2 years from now, 2019. Not the same that Mr. Draghi can do. He fell into the old Ben Bernanke trap. And what he did is he let the cat out of the bag at the last meeting when the bank started alluding to the fact that maybe by year end they have to pull back on their stimulus. So this morning on the trade, and I got in the office today about 6:30. And that's Chicago time, and I'm watching the market. It's dropping as the first parts that come out and the statements come out, and then he's talking, and they're talking about, yes, they're going to stay on track through the end of the year. But I knew the question was going to come about, did they discuss tapering? And he said no, but he thought they would do so in the autumn. Literally, words autumn, market, you turn the corner, right back up. And that's a hard thing to get away from because the markets price in the what ifs, not what is. And that's very important to understand. So on the what ifs, the market is looking at the gain that could be coming in that market. That all plays into gold's hand. And a problem for gold has been, what does it do here? Because it's caught in a trading range. I was on this morning with Vonnie Quinn on Bloomberg. And she asked, what do I see in the gold? And I told her, the gold's right now caught between, let's call it 1295 and 1204. And that is where the market's caught. I even stuck my neck out and said, I don't see anything on the immediate horizon to take it out of that trading range right now. But if the market wants, the question is, what happens to inflation? That's what you got to deal with. I believe that if the Fed and other people are raising interest rates, they're getting ahead of inflation too soon. I don't believe the Fed should be raising rates at all. You need the inflation part to pull it in. If you keep raising rates, you stop it from ever grabbing and you've accomplished nothing. You've hurt the economy. And I think that's what Mr. Draghi said in a better way than Ms. Yellen has been saying it. She's got the word transitory. He can't explain why the inflation isn't coming on. So as a gold trader, I consider this 1252 area the neutral point. And you'll say, why is that suddenly neutral? And it's because it's about the halfway point between the current high and low. And that seems to be where the market's stuck or wants to go to get stuck. The break low recently was 1209.70, and on a closing basis, it then started punching through and making higher closes. You'd have to get back in here around the 1217 area to get me concerned that the market, this run is over to the upside. As you can see, you've been moving up on a regular daily bar chart, and when I put my swing line study, which I don't know how people trade without this, frankly, I get to see that the key now is today's low. Why is that the key? Well, markets that have upward trends have higher highs and higher lows. That's number one. Number two, you have an outside day up today. Very important because my trading rule is that you set up bull traps if you take out the low of an outside day up within 2 trading sessions, and I'll stick with that. Where might the market head? We've already looked at the weekly chart, so if we go to the daily chart, 1251. Those numbers are right by each other. So if it wants to come up, the 100-day average is here. But where are you at this minute? You're in an uptrend with the swing line. The bias is up because you're over the 18-day average of closes. If you can clear the 100-day average of closes, the Bollinger Band, that let's call it that brick fence is waiting for the market right through here at 1257. So I'm fairly comfortable that I'm judging where the resistance might come in the market. And in momentum, what's got me concerned is you're very overbought. In order to keep this going, you got to embed. You're nowhere near it. And embedding converts the overbought into a locked-in bull trend. You haven't done that in a heck of a long time. When you had the embedding on the downtrend, you kept breaking the market. That's great. You did it here too. But now you're trying for an uptrend. The good thing going for the market is that if you're a gold trader and you watch seasonals, the bullish seasonals kick in on the 24th of July. Early September is when they often end that surge. Now, does that mean it has to go up? Nothing on seasonals means it has to. But when you go back and you look at the more research studies, which I do all the time, I'm looking for what has been more or less a norm. From that, I always look at the chart. Would I ever trade a seasonal without the chart action confirming it? There is no case. That is not the determining factor. The chart's the determining factor, then I look to see it the other way. In the GLD, it's the same pattern. Higher lows, higher highs, coming into the resistance now of the 100-day average at 118.72, and should it be able to poke through it, it's got the upper Bollinger Band all of another 80 cents away, and you're overbought. Same chart pattern in GDX, and these numbers get even closer together. The difference between the 100-day average and the upper Bollinger Band, 22.63. Does that mean you're bearish at those numbers? No, but that's where I'm expecting pros. From this point right here today, right up to that number, I think pros are liquidating, not adding to their long positions, and they'll take it from there. If they have to buy it back higher, they will. But do you want to buy into an upper Bollinger Band? If you do, God bless you. There's somebody there that's got a better record than you do on the current chart patterns. Same thing on buying into Bollinger Bands as everybody's getting bearish. So I pay attention. Does that mean the market can't pick up and streak ahead? It does not. I look for the norms. That's all that I look for. And I realize that you're going to come out of this sideways action, either streaking to the upside or downside. And during that process, if you keep on, for example, if you're long and you took off part of your position there and it ran, you're still in. But you got to keep that part you hold with a tight stop because the odds favor it's going to work against you. You got to come up with a game plan. That's the key. The gold-silver ratio, okay? It came down to 76.21. That's a pretty good number. You've come down quite a ways. You could bounce here for a while. But I like what I'm seeing in the silver chart. I liked it a lot more this morning than I like it at the end of the day. And you're going to say why. During the morning, we had an inside trading day. So now, let's assume with the action in the market, you got higher lows, higher highs. Let's assume you want to be a buyer. Maybe you're buying the 18-day average of closes. Great, 16.14. But now you got to have a stop under the most recent low. You don't have to, but that would break the pattern. That's too much risk. $3,000 on a full-size contract. Bye-bye, I have no interest in it. Keep your eye on copper. You got downward seasonals coming in copper at you soon. Is there a trend here for that? No. You've got a downtrend with lower highs and lower lows. It's countered by the fact that the market's over the 18-day average and you have an overbought condition. I consider this a waste of time to look at. In the platinum, you're in an uptrend. The market's got a pattern of higher lows, higher highs. You tell me where the market held. This is how you came in today. You're overbought. What number do you think should hold the market, though? I would say the 18-day average. If it rallies, what number? Let's assume it doesn't drop. Where's the resistance? I say the upper Bollinger Band. But you're overbought. I have no interest in something like that when I put out and teach trading. Put out recs, teach trading, and that's what I do. Now I'm looking here. Yesterday you got up to that upper Bollinger Band area. That's where I think the pros stepped out. Now you have nothing on this chart. You got a higher high, and as it turns out, a lower low. Momentum was overbought yesterday. You take a look at that. Why be involved? You even had an outside day down yesterday, which is real bothersome in the market, and today it just followed through. Very difficult to trade something like that. Dollar index, just bearish, and even more bearish. Why? Because you got an embedded reading. However, what do you see on the chart that should keep you at bay? You're under the lower Bollinger Band. Why do you want to go short under lower Bollinger Bands? You spend 5% of the time under them. Yes, you can roll up a bunch of days. But look what happened here. I know it doesn't look like much to you. That's a lot of money that the market came back on you. I think the pros are taking their money off the table, and they'll sell into the rallies, hoping not to take out today's high because it's an outside day down. If you take it out, I think the market then has a shot of going back to the 18-day average. Is there anything bullish on the chart? Nothing at all. So it's game plans, and that's all that I try to talk here. I don't tell you in these videos, buy here, sell there. I try to instill in you the idea of game plans and why I come to these. Now, there's more tools than I use than this, and my subscribers see them every morning when I do my videos. One of the tools that I do use, I don't mind sharing with you, is the Moore Research Center information. They're looking for trades that work, I think it's a minimum of 13 out of 15 times. And they have to do it year after year. And if not, they're dropped out, new ones come in. And then you get to play with their interactive charts for bull years and bear years, and they write a lot of reports for you to give you an idea why these seasonals are at work. How do you get free access for a couple of weeks to it? You give us a call. You can go to our website, sign up for it. You can click right up here. And if you see that icon, it'll open up the form. Choose that for yourself. Or under us on many websites, it says, click here for Ira's free information. 2-week trial, you get your email address and a password. I'm Ira. Thanks for watching. Take advantage of these offers. Take care now.